my name is Neil Young. I'm the CEO of ASX-listed Elixir Energy. We're currently focused on a substantial gas project in Queensland, a location that needs a lot of gas. We've recently done a great deal to expand our position there, and I look forward to chatting about more of the detail of that to you, Matt.
Neil, good to see you, sir. Very good to see you indeed. Okay, so why this decision to shift focus towards the Taroom Trough?
So this commenced nearly 3 years ago in 2022. Prior to that, we were focused for a few years in Mongolia, and we've still got a position there. But geopolitical events occurred in the Macmillan sense, and we reacted to them. Those events, obviously, the sudden one was the invasion of Ukraine. I suppose the gradual one was the deepening of the general Cold War between the West and China, Russia, etc. Mongolia is a great place, but it's in a slightly awkward location in terms of its neighbours. We considered it timely, therefore, to diversify into Queensland. And since then, we've had enormous success in adding acreage, undertaking work, de-risking the play, and with this new deal, we really doubled down on that.
Well, tell us about the deal. So what's okay? You talk about it. It's been a long time in the making, but why? What's so special about this, and why? How did you manage to get it in the nicest possible way?
This deal is with Santos, Australia's second largest oil and gas company. Probably not coincidentally, myself, most of our board, most of our technical team have all worked there and know them reasonably well. Their acreage in this region they owned 100% of, and towards the end of last year they came to me and said, look, we haven't really got any corporate budget to drill the well that we're supposed to drill by March 25 in this. Have you got any ideas? And we came up with a joint solution to go to the Queensland government to use a mechanism under the law whereby they could get an extension to the work program if they brought in a qualified partner. We met that criteria given the work that we just done in the region and the good relationship we had with the regulator. So that then became the foundation to enter into a farming deal under which we got a 50% stake in both permits. Now, clearly, we're a much smaller company than Santos, so why did they do this is an obvious question. And I think the answer is multiple. They are focused on a couple of very capital-consuming development projects just now. They recognise that they're good at production and development, but the juniors have a role in exploration and appraisal, and they've stayed in this venture. We'll spend some money, we'll hopefully de-risk it, and then they're still under play. And so I think that's the essence of why they did it. Why they do it with us? Well, I think we came up with a solution that met their needs, and it needed to be done quickly, it needed to be done nimbly, and somewhat immodestly. I think we have some track record of doing deals.
Okay, but what exactly have you picked up? What do you know about this project or the potential of this project?
So this is a large unconventional gas play. This pretty homogeneous and doesn't stop on license borders. So the work that we've done, the public file data that we got, made us highly confident that our unconventional play extends into their acreage to our immediate north, and that we're also pretty confident that a subset of this play in the Taroom Trough, which Shell has been spending a lot of money on, also extends into their play, and that was a really attractive aspect of it. That confidence was validated by an independent contingent resource report, which we announced at the same time as the deal.
But well, explain that. So Shell obviously working there, obviously signifies there's something potentially big there. They don't go after small stuff. But what's the proximity to them, and what's the potential in the future?
Okay, so if we imagine a map, we've got a large block in the middle that we've been working on for the last 2 and a bit years. Now, our immediate neighbour to the west is Shell. Our immediate neighbour to the north is Santos. Both of those, all of these blocks cover what's called the Taroom Trough, a deep Permian era gas-bearing basin, which is tight but got an awful lot of gas in it. Now, Shell have been doing work on their parts in 100% ownership, which means that they don't need to say very much about it through pesky joint venture partners. And now we managed to find out things through just anecdotes, talking to people, even talking to Shell. But there's not a lot in the public domain. But what we do know is that their predecessor company, British Gas, spent $300 million on this about 12 years ago. Shell came back 2 or 3 years ago, probably spent another $200 million. What they've expressed verbally is that they'll drill more wells and do more seismic this year. There's another few $100 million there. So, as you said, they don't do small things. They don't do things lightly. They've got a significant position in Queensland which this can support, and we're enormously encouraged by what they're doing. And we're gradually seeing that the general stock market, who doesn't really see these things as closely as us, is starting to really get the picture on that.
Right, and so what are you obliged to do? Obviously, you've raised some money. You got some tax refund end of last year as well. What are you obliged to do? How much are you obliged to spend? And and how do you kind of, I guess, what are the terms in terms of like concluding this joint venture? Because if you don't meet certain terms, obviously, no one gets anything. Well, you don't get anything. Can you run through that?
Yeah, so it's a classic farming deal whereby we promise work and we get equity in the permit. Now, the equity level that we get is 50%. The work that we do in the critical permit is to drill a well to just over 3,000 meters. That meets the exploration commitments that are owed to the government. Now, we operate and pay for that. Afterwards, Santos resume being the operator. Clearly, they're in the longer term a far more capable developer than us. The cost of that well will be distinctly less than $10 million. It's quite a bit shallower than the one that we drilled in our block, and we don't need to stimulate it in order to earn. We will also, you mentioned the tax credits that we've been successful obtaining in the past for R&D. And we are designing our program to continue our qualification for that. So the actual cost of the well will be about just less than half, will be paid for by the government. So that's great. In the second permit, there's some seismic to acquire. That's not until 2026. It's like a couple of $1 million, and it's well down the road. It's really the key to this is this well.
But I find it extraordinary. Someone like Santos and with their balance sheet won't allocate the money or the resource to this. Is this because it's so far down their list of priorities? I mean, or did they not value this thing? Or are they trying to say, well, you work out if there's something there. If there is, we'll come back in. If not, great strategy from them. So why is this in terms of risk profile good for you and good for them?
So some of these we can speculate on, and some will sort of know. What I would say is public is that Santos have got a couple of very large development projects. The board's incentivized management to focus on those. And what that probably meant was this longer dated asset fell down the focus areas. It sort of got to the point whereby they really needed an extension of the exploration period, and we provided a mechanism under which they could obtain that and still stay in it. So we think it was a great deal. We don't think it was a bad deal for them. We certainly think it was a great deal for us. And as I say, a certain amount of nimbleness, which is one of the attributes that a junior actually has over a senior, came to bear, and which we took advantage of.
Okay. So let's kind of maybe get into the asset. So I mean, and given the contingent resource increase post Santos farming, how do you go about upgrading these reserves? What are the kind of key hurdles for you? What can you do?
So what we can obviously to convert contingent resources into reserves, we've got to prove commerciality, and that's got a number of dimensions to it. But obviously the key one is a commercial flow rate. So this well, we'll drill a vertical well and then come back later with Santos to put a horizontal section into it. Now, based on what we're hearing about what Shell's been doing, they have maybe already exceeded the commerciality test, but that's not public. Commerciality here is strongly supported by the very high gas prices that pertain. And also we hear anecdotally that Shell have been getting a lot of condensate, that is light oil, in their gas stream. And that really, really helps economics as well. What this new acreage gives us is a bit of an up-dip location compared to what we did before. With depth should come a correlation to liquids. So we're up dip, hopefully this is more liquids rich, and that really helps the commerciality test too. And what we also have is a neighbor to our east who is a listed company and who will disclose what they're doing. They're just about to do a flow test, and within basically the next 1 or 2 months. And because this is a pervasive unconventional play that doesn't stop at borders, if they're successful, then that success also de-risks our own play and helps us on our own journey to commerciality. So there's a lot of things coming together here which could really lift all boats. And we're a small boat, and hopefully then be attractive to much bigger boats at that stage.
Right, and okay, well, let's talk about that. In terms of what are the next sort of milestones then, or technical milestones, I should say, for ATP 2056, 2044, 2077, and then how do those technical milestones shape commercialization? Because the kind of speed to market is, I guess, what people will be interested in. Certainly for you guys, people who have been long-term shareholder or long-term followers, trying to understand, how does this dramatically shift the company's fortunes?
So the events which will happen over this year, which any success case will do that, really are as sort of follows. So immediately there is the flow test from next door, which will occur in the next month or so. That will be public and enormously useful for us. Later in the year, in Q3, we will drill our well into the Santos acreage, gather data from that, meet our commitments, and hopefully affirm that we're in this same liquids-rich play as Shell. It'll be flow tested the following year, though, once we put our horizontal lateral in. We've also got another well in part of ATP 2077. It's a shallow conventional well called Diona 1. We are well advanced in farming that out to a very different type of partner, a small company. That should deliver a well in around the middle of the year. I say it's smaller, but it's immediately proximate to pipelines. If it comes good, we can generate revenue, really, really quickly thereafter. Also, what we're doing in the background is ascertaining what Shell is doing. They could recommence their drilling program in the second part of the year, but be coy about it. And the path to commerciality here, given the resource is so large, really involves bringing in larger partners. Now, the deal with Santos gives us a larger partner with capability and a need for gas. In our 100% acreage, we can engage with other large parties already in Queensland, or, for instance, large US, in Canadian tight gas specialists who would see very few places in the world that would be meritorious to go in, but here is one of them. It's large, it's low sovereign risk, and it takes advantage of their skills. So we are aiming for a farm out this year on that 100% owned acreage, not guaranteed, but that will really serve to signal the play is de-risked and that we're on the pathway to commerciality and production.
Okay, and then just on you mentioned sort of US type plays, technologies. Can you sort of elaborate on some of the specific techniques that you're going to be implementing, and are they sort of conventional in that sense? There's nothing that you're not used to?
So I think that a lot of these things are really the application of know-how and skills, rather than like a secret sauce which people don't let you have. And what the large American companies do is horizontal drilling and fracture stimulation, and they do it a lot. I mean, some of the bigger companies do many hundreds of wells a year. And over the last 10 or so years this is occurring in the States, the productivity improvements that they've achieved have been massive. But it's about doing it right, getting the right equipment, getting the right service sector. And the service sector is coming here. There's already frac companies and drilling companies from America in other parts of Australia who are talking to the likes of us about coming into this play. So there are elements of these things which are new to Australia, and that's part of the R&D credit process that I mentioned before. But otherwise, it's not some incredibly difficult secret thing. It is applying things which a good number of American companies know what to do, and a good number of the international companies already in Australia, like Shell, Conoco, etc., know a lot about as well.
Right, and given sort of the depths that you're talking about, 3,000 meters, I think you said. So if you cross the kind of four wells, I think it was 2044. 2056, 57, and 77. What are the kind of challenges with the reservoir does the reservoir depth present in terms of pressure management and well integrity? Will that be a problem down the line, or is that experience involved there?
These are deep, and even a 3,000 meter plus well is fairly deep. The one we did in the last couple of years was 4,300 meters deep.
Okay.
The drilling conditions were pretty benign in terms of the geology. Didn't present particularly hard rocks or difficult fractures. Now the pressure is an issue, but it's a two-edged sword. It is called what's overpressured. That is higher than normal hydrostatic pressure. That means you need to be careful when you're drilling in terms of having blowout preventers, etc., that meet the spec. But what overpressure means on the plus side is the gas really, really wants to come out. And what you'll get is more production per well in an overpressured formation compared to a normally pressured formation. So it's one of the key signatures you're looking for, and one which we've firmly confirmed exists here.
And how does that kind of how does this the geothermal gradient affect gas extraction? Because I guess, are there any kind of concerns around the thermal maturity impacting production?
So I suppose there's a few issues with thermal maturity. Firstly, this is not hot compared to some basins like the Cooper Basin in the centre of Australia. This is normal temperatures for the depth. Now, it's still reasonably hot, but not to the extent that you're having tool damages or anything like that. Now, in terms of the thermal gradient, that can sometimes cook gas and be a contribution to high carbon dioxide. But here's low carbon dioxide, which is pretty important in terms of cost, in terms of partnering, in terms of people's perception of if you're dumping it into the sky, that's not a good thing to do. This is pipeline spec. Again, heat can cook liquids out of gas. But what I've described earlier in the up-dip locations is the liquid contents seem to be, pretty good. So I think that there's no thermal issues here that are negative, and some which are highly positive.
And what about sort of permeability and gas saturation when you're dealing with tight sands and kind of deep dry coals as well? So
that is the key challenge, and I really see it. And the engineers will hate me for saying this. This is an engineering challenge, not a geological challenge. I mean, we've confirmed with pretty high confidence that the amount of gas there is just a shed load. But to give an example, we recently increased our contingent resources in the deep coals. We flowed them for the first time ever. We developed a view, independently certified, that the gas in place in the coals alone in our block were like more than 30 TCF, but the contingent resources were like 200 BCF. So an estimated recovery factor of less than 1% on an initial booking. Now that reflects the permeability is very low. It needs to be stimulated. The porosity is fairly low, but the thickness of the formations and the overpressure means that even with the relatively low porosity, the gas in place is just crazily off the scale.
Right, and so you talk about engineering challenges or engineering issues, not geological issues. So when you're sort of designing the drilling, and is this going to be predominantly vertical, horizontal? I don't know what you're looking at.
The development case will almost certainly be horizontal, but
okay.
The well we did before this was a vertical one. It gave us a lot of data on various formations, because certainly compared to America, the amount of penetrations in this large trough are few. The optimization as to which formation is best in a particular spot is still sort of being under investigation. But the medium to long-term case is absolutely horizontal, and it's really a question of getting costs down and really putting as much proppant into the formation as possible to increase the poor natural permeability to be reasonable and get that gas and condensate to flow.
Okay, and is that going to require sort of some multi-stage hydraulic fracturing, or
yes,
yeah. Okay, interesting. Okay, there's a lot coming down the line. So just in terms of timeline, then, and so what are we looking at? Obviously, just got the deal closed, and we got to go again. So what are we looking forward to, and what have you got to get over the line?
So the cash raise will go towards the well that we'll drill in the Santos block in around Q3. With the R&D credits, we're not spending all of that cash, and Now, as I say, we'll have another well that's be fully carried in the middle of the year, presuming we close a deal. And then the outside activity will help to put eyes on this and to de-risk it technically and to increase the chances of further large partners coming in. So an awful lot happening in this year. For a small company, we've got quite a few of our own wells. And look, the wells that next door neighbours are doing and paying for, they benefit us as well. So it's like the best well of all. Someone else pays for it completely, but it still benefits you. So that's and that happens vice versa as well. So I think the rising tide here is lifting a number of boats.
Right, and just in terms of that obviously all the people around you, and you talk about the public company off to the east of you as well. Are there kind of key learnings, or whether it be analogs as to how production rates for planned wells and decline curves have worked out for?
I think another analogue that actually pertained in Queensland in the past was in the previous coal seam gas boom of about 15 years ago, everybody competed against each other in developing pipeline and other infrastructure, and that probably cost everybody. It was based on ego, or dare I say it, testosterone. But I think it'll be maybe brave to say people have learned their lesson, because these things come around. But what I do see is that we and the other operators are talking to the government very sensibly. The government can play a significant role here in making sure that infrastructure development is cooperative rather than competitive. And in Queensland, we have a supportive government anyway, and they changed hands in a recent election. They are even more supportive. I think other anecdotes from other places are like proppant. I remember, I've been around long enough when the Permian really sort of kicked off as an unconventional play. They were importing proppant from outside Texas, and then, hey, they worked out, hey, there's a bit of sand in Texas, we don't need to do that. And I think, in these early stages, we import our artificial proppants from China. I think Shell took some in from Saudi, but you've probably been in Australia. There's a bit of sand here as well, and I can see that locally sourced sand will become available in huge quantities, and really sand's about logistics as much as anything else. So I can see that developing as well. And in the service sector, coming and costs go down generally.
Right, so proppant's being considered for the hydraulic fracturing, presumably. So in which case, then, how does the lithology impact on the frac design?
I'm not a geologist here, so I'll probably defer that a little bit. But some of the research and stuff that we've published before indicate that the stress regime, for example, here should be pretty receptive to the sort of fracs that we and others have been designing. I think in terms of lithology, we're just targeting the Permian. That's where the gas is. I think that there is still an enormous amount of learning to come, probably over many decades, as to the optimal sweet spots in there. Is it the late Permian, the early Permian? Is it different as you go, east and west and north and south? And
okay.
So early days, but a lot to be learned there.
Okay. Let's go back to the commercial. So it's maybe getting a bit technical for some people, but let's go back to the commercial bit for a second, which is in terms of the what you're actually seeing. There's a lot of methane, presumably, and I don't know how much CO2, etc. But in terms of whatever that looks like, in terms of additional processing steps, in terms of dehydration or compression or etc. needed for the gas going into the pipe network. Again, what do you know? What do you expect?
Because what we know is, and this is vital, is that CO2 is basically pipeline spec. Now, if I compare that to someone else in Australia with the Perth Basin, has been a great success in recent years, their CO2 is a bit above pipeline spec, so they need to strip that out. Now, that comes at significant capital cost in terms of plant. It also comes at the risk of cost in terms of government taxes or on carbon emissions. Now, we don't have that at all. What we've seen in the deep zone is that condensate is not particularly large quantities, but condensate is very easy to handle, effectively drops out on the lease just through gravity separation processes. There is some water to take out, but not a lot. This is not a coal seam gas play. There's minimal water in it. It's just an element of dehydration. LPG has not really been seen to date. As we go up dip, if the condensate is as high as we think it might be, then that's great for economics, but you need to know where you're going to take it. And that in the full development case of the Taroom Trough, that might mean new oil pipelines going to refineries on the coast or elsewhere. But hopefully people like Shell will be managing that rather than us.
Well, that's what I mean. So again, in terms of, when, if all goes well, Santos step back in, clearly, look, you get an equity position, but, with a company like that, it's going to be hard to make announcements in a public company like yourself. So in terms of trying to understand what the deliverables are, what the outputs are, what the sales are, quite frankly, because sales is nice because we're talking about revenue stream there, but before that, there's a kind of world of we've done X, Y, and Z. You should value that the following way. Is a tough one for the market. So how do you expect to kind of go through those sort of step changes of accretive value given to you by the market? What do you need to tell them? What will you be able to tell them?
Well, I mean, typically under a joint operating agreement, you have confidentiality obligations, but you also have a carve out. If you're a listed company, you're entitled to say things that are market sensitive, and you have to be able to say that. The working with a much bigger partner, people have asked me, well, is that bad? Because what does Santos want to go slow, and or what are they going to go quick? How are you going to manage? And I sort of say, well, look, in this huge resource case, we're not going to be who we are. We're going to be somebody else. And whoever that someone else is who comes into this play, they deal with people like Santos every day of the week. That's their job. Say they were Conoco or BP or someone like that. That's just what they do. In the joint operating agreement has normal preemption clauses, which are common in the oil and gas and resources sector. That means that your partner has a right to preempt an incoming partner, apart from one scenario. If we're taken over, they've got no right to do that, and that's a typical carve out on these things. And if you're a junior, it can be a useful mechanism to drive competition and such like in the takeover space at the right time. So. I mean, those things pertain. We know Santos pretty well. We know there can be some rough as well as smooth, but at the end of the day, you need big guys in these plays to take them forward, and that's what we've got, and we're pretty pleased with that.
Well, yeah, and I mean, given the size of the prize, you get because in terms of we talked about well management earlier, but you've got to get field management as well in terms of the kind of well spacing and ultimate recovery. What assumptions are being made on that, and what information will you be able to pass on to Santos, with regards to, the drainage area per well, or, and are there lessons from the Permian that you can sort of, bring through to can maybe help you with that understanding?
And I think that there are lessons from various basins in the States, and they all have different geological characteristics, some of which might be more relevant to us than others. I think in terms of well spacing, it's going to be depending on how long your horizontal laterals are, how they communicate with each other, and those things have only been learned in America over a number of years. And as I say, productivity's gone up enormously there as people have achieved those learnings. Probably what is important in these unconventional plays is to do 3D seismic. And we, anecdotally understand that Shell plan to do that in 2026 to cover their block, and certainly will be interested in engaging with their seismic provider to extend that to our immediately adjacent blocks as well. But that'll be development planning, and that'll be enormously exciting and likely to be carried forward not by someone like us in isolation, but bigger partners who'd want to play in a similar way as Shell are doing.
Okay. Election time coming up in Oz. It seems there's a lot of discussion around energy, debate around energy, and the Australian government. What is the Australian government's position, whether it be state, obviously Queensland, and federally, with regards to its thoughts on gas, regulatory support, and policy shifts that may or may not impact your business?
So the current Labor government, which is a bit left-wing, started off being a bit anti-gas a few years ago. Their policies completely and utterly failed, and they tried to cap gas. They effectively put a floor under it. They sort of recognised that themselves with a degree of grace, and has announced a gas strategy last year that recognises that the gas isn't optional; it's required for the energy transition over many years. And indeed, we see that even they recognise that there's imminent gas shortfalls likely to arise on the east coast of Australia, and that the likes of where we are is one of the few locations to support it. In our election, if the more right-wing party comes in, then it'll be far more supportive of our sector. There could be a government that's propped up by various minorities that might have various views. What we do have in Australia is state governments with a lot of autonomy. They control the subsurface in their own states. They get the royalties from its exploitation, and therefore they're strongly incentivized to protect investment in their states if there were to be some wacky ideas coming out of the central government sphere.
Right, and where in terms of pricing currently and projected, we've seen some companies in Oz going to struggle when politicians get involved and pricing fluctuates, shall we say. What's the position in Queensland? What's the market you're selling into? And how do you, what confidence have you about the kind of stability of that gas pricing going forward?
So we're located very near to a physical and pricing infrastructure called Wallumbilla. There's publicly available pricing there. It's in the region of $14. I think every professional projection that I've seen indicates that there's no scenario which prices are expected to fall. But one thing that is almost certain to happen, which could increase prices, is that in New South Wales there'll be the importation of LNG from next year. That's expensive. That'll send $20 plus price signals into the market. There'll be some degree of demand destruction probably from that, but supply's falling off quicker than demand destruction. And of course, in Queensland, we've got the LNG plants with spare capacity as well. And they have price signals of, that into the plant of probably in the region of $12 to $15 as well. So there's enormously strong pricing. They like 2 or 3 times what we see in America and expected to be sustained. And I think even the government has learned you try and intervene in markets usually makes things worse and not better.
Right. And so typically with something like this, how does a company like Santos or Shell get after these fields in terms of trying to get to the point of some realization of revenue, i.e. selling into, you got to manage the field at the same time, you've also you want to sell into the pipeline. What's the time frame for something like this? Because that's when you really get to see some upside, certainly to your balance sheet.
Well, what we understand about what Shell is doing is that they're on a timeline to development really in sort of late 26, 27, which is pretty soon in oil and gas terms. Now, because there's an unconventional play that's located immediately proximate to infrastructure, that it doesn't need a single FID that one day you're doing engineering work, the next day you have a big signing ceremony, then you're spending billions. I mean, here you can incrementally spend tens of millions. You can feed markets that are small to start, then you can build up your infrastructure, you can do more drilling, then ultimately you can feed into the much larger markets with increased confidence, with lower costs as you've learned as you've gone, and as markets, for instance, develop as the current input into the LNG plants falls over.
Right, okay, interesting. And what would you say to shareholders? Because it's been a sort of tough 12 months, I think. For them, what would you say to shareholders who say, right, I'm waiting to see something good here? You kind of got two routes here. One is we've raised a bunch of money. We're going to drill one hole. We're going to spend a lot of money on that thing. But if it comes off, happy days. Everyone should be delighted. If it doesn't come off, that's slightly more problematic. So you're going to have maybe two camps here who've wanted to get ahead of that upside. And you're going to people saying, I'm going to wait to see if you actually, hit pay dirt. So is that actually a fair reflection of, the risk that you're taking here?
Clearly, the price of Elixir has gone down over the last 12 months, but I find myself saying I don't think we've ever been worth more. And if I can put it in very simple arithmetic terms, a share in Elixir currently costs a bit less than 4 cents. Now, that each share in effect owns 2.5 gigajoules of discovered contingent resource. They sell for $14 each. So do the math. You've got about $35 there for 3.5 cents. Now, of course, I know that's not reserves, and you've got to spend the money to take it out of the ground, etc. But it gives you a pretty significant buffer between the two. We've never been in such a strong position in terms of resource per share before. And as I say, we're also benefiting not only from the work that we do, but which others do too. So that's a lot of leverage to our outcomes as well. It's money that we're not spending is helping as well as the money that we will spend. So as I say, I think the market will probably flush out a bit of stock that was issued recently to people. Some people don't hold stock long, and we've seen in the past that those are the people who miss out on rises when they do start. Once you've rebased, the news flow comes in. You've got some stronger hands who can actually try and make baggers rather than make points, and that's what we're currently seeing in these current few weeks. Within the next 2 months, we'll see what our neighbours are doing, and then the next couple of quarters after that, you'll see what we're doing.
Okay, so in terms of degree of confidence, like everything's got a degree of risk, but in terms of confidence, do you feel that there's not a case of will we find anything? It's a question of how much.
Well, I don't maybe phrase that a different way. We've found an awful lot. We've got this discovered resource. Now we need to optimize how it comes out such that it becomes commercial. That can be helped by, for instance, the greater liquids play that we think we can be exposed to in this Santos block. It can be helped, obviously, by lessons learned from others who are busy around us as well. And, of course, lessons we've learned ourselves. I mean, we drilled a complex, deep, expensive well. We got some very positive results. Ultimately, it wasn't commercial the first time around. But to put that into context, Shell drilled 3 wells. Their first one was a complete dud. The second and third ones were good. That's what happens in this industry. And I think the market got a bit skittish because they, thought that this stuff's easy, and probably including myself. But it comes with its challenges. We've rebased. We've added to our position significantly with a great deal, and we think we've never seen more leverage than we currently see from where we sit just now.
Okay, fantastic. And talking of skittish, just one comment I sort of saw in I think one of the chat rooms, which is about obviously the geopolitical situation at the moment. US and Russia in negotiations about some cessation of activities in Ukraine. Will that be a question of then Russian oil and gas flooding the market again, or is it just a question of the direction of the flow of the oil and the gas? In which case, there's no new oil. It's a question of who buys from who.
Certainly, in terms of oil, there's no new oil. I mean, the Russian production, didn't really cease. It just went to India and China, who paid less for it. So there is a perception that they could increase production. That'll impact oil price. In terms of gas prices, gas is far harder to move around. I don't think Europeans are going to rush to buy back Russian gas again. Maybe some will in small markets like Slovakia or Hungary or whatever. But hey, you live in England. Did you want to buy Russian gas? Do you trust them?
I just want cheaper energy. I'm quite selfishly. The politicians hopefully will sort themselves out, but I just want cheaper energy. We're paying 4 times what the US is, and I think that's got to be resolved. But that's another conversation for another day. And I'm sure the Australians feel the same way.
Well, they do. Yeah, prices have gone up here a lot, and people are obviously very sensitive to that. Say, price of gas used to be far cheaper than it is now. A lot of political interference has contributed towards the price rises. But I mean, America's just absolutely blessed in terms of geology and in terms of the capability of the oil and gas sector, as well as regulatory environments in places like Texas. But they're all of those are very hard to replicate elsewhere.
Right, and obviously, I think there's a bit of conversation. We should wrap this up, but there's a lot of conversation about nuclear in Australia. But even if everyone agrees, that's a long time coming down the line. So the source of energy in the moment in terms of that mix, what's it look like? Who supplies it? We've got coal power fire stations still going, have we?
We do, and they're sort of going towards the end of their lives, but they're still pretty much needed. And so you've got the bizarre scenario in some states where politicians are secretly paying to keep the coal-fired power stations open and sort of criticizing gas, which is weird and not good for the planet. And I think anybody who knows energy deeply knows that you need everything, not just some things. So nuclear will have a role, but it's long dated. But what anybody sensible knows is that renewables have their place, and that's great. But the more of them, the more you need gas to balance the system. Batteries are fine for a few hours, but you've got a period of days or weeks. The politicians aren't going to be voted back in if there's blackouts then, and so no matter what where they sit on the spectrum, they're not going to want to lose their jobs, and they're going to need to support the gas industry accordingly.
Neil, appreciate your thoughts and today, and obviously congratulations, exciting times, and we look forward to hearing more from you.
Thanks, Matt. Always a pleasure.